Hello and welcome from Kenya's capital here in Nairobi, the city known as the place of cool waters. This is the city that hosted this year's annual general meetings for the Africa Development Bank here in Nairobi. Among some of the key issues that took center stage were around reforming the global financial architecture. This was one of the key themes that this meeting had that brought together over 3,000 delegates who are discussing key issues affecting the financial system. Well, one of the key highlights is the presidential panel, which set the tone for conversations at these meetings. Let's take a listen in on what the presidential dialogue had to offer.
Welcome to this presidential dialogue on Africa's transformation, the African Development Bank Group, and the reform of the global financial architecture here at the annual meetings of the Board of Governors of the African Development Bank, holding at the KICC, Kenyatta International Conference Center, in the beautiful, and I must say green, capital city of Nairobi. My name is Victor Oladokun. Yes, you can clap for Nairobi and certainly for Kenya. Kenya is green and has had a long history of being so. My name is Victor Oladokun, and it really is an honor to moderate the two presidential dialogues that are ahead of us this morning. Our conversations will revolve around what must be done in a fast-changing, dynamic global environment to kickstart and transform Africa's economies, as well as ensuring that they do remain sustainable. But first, permit me to invite to the podium a global leader who has a reputation, actually two reputations. One for not believing in the word impossible, and two, for being dubbed Africa's optimist-in-chief, a very well-deserved tag. Not because he is unaware of the continent's many challenges, but because he strongly believes that under any circumstances, change is possible. Please join me in welcoming to the podium once again the President of the African Development Bank Group, Dr. Akinwumi Adesina, as he comes forward to provide opening remarks.
Your Excellencies, heads of state and government, their governors, I wish to thank you immensely for attending these 2024 annual meetings, and in particular for being here for this particular session, which is a debate or conversation with you heads of state and government about the issues of the transformation or the reforms of the global financial architecture, the African Development Bank, and of course, Africa's transformation. This is one topic that I know is close to your heart, as you all have been advocating for the reform of global financial architecture, the reforms of the United Nations, including the United Nations Security Council, and we just heard from His Excellency President Ruto all about that. And why is that being done, or why is that necessary? That's to ensure that Africa's voice is heard, that Africa's priorities are in fact prioritized, that Africa's financial needs are appropriately considered, that there is equity, fairness, and justice in dealing with the most pressing challenge of our time, climate change. Clearly, the global financial architecture has a great role to play in mobilizing resources for development. Yet, it is not delivering enough for Africa in 5 ways. First, it is under-delivering on climate finance for Africa. Today, while Africa's climate finance needs are in the order of $277 billion annually, the global financial architecture delivers only $30 billion for Africa, a continent that contributes the least to climate change and which suffers disproportionately from its negative effects, as we have seen in several countries. Second, the global financial system is not delivering financing at scale needed for accelerated development to meet the SDGs. United Nations Secretary General Antonio Guterres has noted that the financing need now has moved from $2.5 trillion to $4 trillion annually. Africa alone will need $1.3 trillion. With SDGs, of course, due to lack of adequate financing, Africa will not be able to meet SDGs by 2030 under the current trajectory. Third, the COVID-19 pandemic showed the huge divergences in financing capacities to deal with global pandemics and its effects between developed countries and developing countries. While developed countries provided over $19 trillion to support their economies during this crisis, pandemic, equivalent to roughly 18% of the global GDP, African countries provided only $83 billion, or 3% of their GDP. No wonder there is economic divergences between Africa and developed countries and even emerging market economies, because we hear something about COVID, that people have long COVID. But now also in terms of fiscal space for African countries, it's a long COVID in terms of fiscal space because it takes a long time to be able to recover from such pandemics like that. Fourth, the global contingent financing facilities have not been fair and equitable. Take the case of the special drawing rights, as President Ruto has mentioned. Out of the $650 billion of Asia allocation, Africa got $33 billion, which is roughly 4.5%. In other words, those that needed it the most got the least. However, I want to really thank the IMF. I want to thank my sister, Kristalina Georgieva, and all our team at IMF, and of course the IMF board, for recently approving the use of SDRs as hybrid capital, which of course multilateral development banks like us can leverage 3 to 4 times and deliver greater impact based on the model that the African Development Bank and the Inter-American Development Bank have developed.
I'd like to kickstart this dialogue, first of all, with a question for President Ruto. Just last week, you took America by storm. You were the talk of the town for a considerable amount of time in Atlanta and in Washington, D.C., the first African leader to go on a state visit to Washington, D.C. in 50 years. From all indications, a very, very successful mission, and we say congratulations to you and to Kenya. Now, for quite a while, you've been a very vocal advocate for reforming the global financial architecture, and we've heard much from you today. You've pretty much given us a tour de force of what Africa needs and what Africa needs to do. Now, considering that change is usually slow and not as quick as we anticipate it or want it to be, in terms of priorities in the short term, what do you think Africa should focus on, and what should be the major priorities moving forward?
Thank you very much. And again, let me take this opportunity to welcome all of us to Nairobi and Kenya. It is said that half the solution to a problem is identifying that there exists a problem. For a very long time, many people did not admit that there was something fundamentally wrong with the international financial architecture. In fact, initially, when voices were raised, they were dismissed. But I want to say today we are very proud, those of us, especially from this continent, who raised our voices, that today the conversation in the world is no longer whether we have a fit-for-purpose international financial architecture. Everybody admits that there is something fundamentally wrong with it. The issue in conversation now is where, how do we reform it? So the issue of reform is settled. It must be done. And I think it begins with, once we understand the problem, then it begins with where do we start? I think what we are saying is we need a financial architecture that has the following characteristics. Number one, long-term financing. 40 years, grace period, 10 years, or something in that order. Number two, low interest rates, concessional financing, including, where possible, grants. Number three, we also need financing at scale. The quantum is very important. And then number four, we also need financing that is agile, that is flexible, especially that responds, that is climate sensitive, so that if there are shocks, that financial architecture must be responsive, because climate change is the new normal. Switching from drought to floods progressively is becoming what it is. In Kenya, we had drought a year ago that decimated 2.5 million heads of livestock. This year, we're in floods that has taken the lives of 200 Kenyans. So this is the new reality. So the financial architecture that must be in place must respond to this climate reality that we have. And finally, is to be sensitive to sustainability. So our priority is to sort out the financial architecture, that's number one. Number two, our priority is to make sure that this continent, with its tremendous potential, we move it from potential to opportunity, from opportunity to investment. And finally, as I have said, even as we try to do something outside, we must also do something inside. That is why we are also looking at our own systems, our own governance, our own instruments. And that's why we are discussing, even internally, reform of the African Union, so that we are aligned as we reform the international financial architecture, as we reform the investment space to create opportunity for our assets. We must also reform our own institutions so that we align them and repurpose them to be in line with our aspirations and the outcomes we are looking for.
Thank you very much, President Ruto. In other words, reform is a two-way street. It's not just one way. But allow me to follow up very quickly. As we all know, Kenya and a number of other countries have been buffeted very devastatingly by extreme weather conditions, unpredictable weather conditions. And I think the projections for Kenya and other countries in the region are that over the next 7 years, we're still likely to see the same kind of weather patterns that we've seen this year. That being the case, and again, following a two-way reform process, what is it that African countries should be doing right now to mitigate the effects of climate change?
It is true that predictions are that Kenya and our region is going to have above normal rains for the next 7 years. That's a prediction. It is both positive and negative. And that is why, working with institutions like the Africa Development Bank, we are developing resilience instruments. It is the reason why we are having a conversation with the Africa Development Bank on our water infrastructure. How do we take care of this excess water? And how do we turn this excess water into an asset for making sure that we use it for our food security, we use it for the positive elements. So we must align our programs, our strategies with the reality of the moment and with the predicted reality of the future. So that is the alignment that we must do.
I'm going to come to President Kagame next on a number of issues, particularly with regards to the global financial architecture, as well as the issue of reforms. Both yourself and President Ruto have been aligned. That being the case, what reforms do you really think should pave the way for giving Africa the resources that it needs to finance its own transformation and inclusive growth, even in the face of devastating climate change? What are the most critical reforms that you see and anticipate are needed?
Now, quickly to the point, we are talking about the architecture of, international financial architecture. Therefore, in mind, we have the architects. So what did the architect have in mind when they provided us with the architecture we have to deal with? They must have had their own interests. They must have framed things the way they wanted to benefit themselves, or maybe we can assume that they wanted to benefit the whole world. Now, we are here discussing the situation as it is, where we find there are enormous resources in this world, but inequitably distributed. So Africa has to look at itself and look at the whole world as it's set up. And we know in this world, people, countries, work for interests, their own interests. Africa's interests and the countries of our continent interests must be taken care of, beginning with ourselves. So, and we talk about speaking with one voice many times. It has to be one voice. It has also to be loud and clear and effective. For that to happen, we think about working together. We think about representation. And representation is not also just numbers. It's being able to speak out loudly and representing ourselves rather than having other people represent us. So it starts from what has been talked about, that is very important, when it was in the speech of His Excellency President Ruto and His Excellency Musa Faki. Therefore, the reforms we are talking about is how do we disrupt, if you will, the current architecture as we have it, so that it includes significantly and visibly the interests of our continent. Our continent, whether it is human resources or natural resources or any resources we are thinking about, how can anyone interested in the well-being of the people of this world sideline our continent? In actual fact, if you look at the facts as they are, in a few decades, the only place in this world that will be having a growing middle class is Africa, the only one. So it is even in the interests of the rest of the world that has marginalized Africa to contribute to the well-being of our continent, because the growth of Africa, based on this middle class, feeds into the growth of the rest of the world. So they should even be accepting some of these proposals in self-interest. Because Africa grows, the whole world grows. But Africa cannot wait to be handed this opportunity by anybody else. We therefore must be on the front line, really fighting for this right, and therefore for ourselves, but also which contributes to the well-being of the rest of the world.
President Kagame, I want to be a little bit provocative here. I've been coming to Kenya for probably 30 years, and there are places that I used to know that I no longer recognize. Why? Because the city's architects have changed the landscape. Now, most of the Bretton Woods institutions were created 60 to 80 years ago at a different time from the one that we live in. So, if we're going to talk about reform, it's not just the access to resources. It's looking at those institutions that were created back then and asking the question, are they still relevant to the needs of today? What is your thought about redesigning a lot of these institutions to make them fit for purpose?
Well, absolutely. It's a no-brainer that what worked 50 years ago or designed 50 years ago, things have changed, and therefore a rethink of a new design that fits the purpose must be into play. There's no question about it. But here what we are talking about is not simply an argument of whether, this is fit for purpose or this. I think everybody understands that point. But there are philosophies, if you will, or interests or that operate behind that. For us in Africa, we are hard-pressed to see that there is a change of these and in the design of these institutions. But maybe the way the institutions are set up, benefiting some parts of the world, those in those parts of the world are not interested in having the change happen because it gives them control, it gives them say over other people's resources even. So it's not that people don't understand. Especially for Africa, we understand it better because of how we are affected. But the other parts of the world that have the power and control, it's also not because they don't understand, but it is because that it serves them very well, benefits them, that they are not interested or they are slow in allowing change to happen. So it's not a very complicated thing to understand. Everybody understands that. What is complicated is to reach this understanding and compromise that we don't lose anything by having everybody benefit as we should benefit all of us. That's where the issue lies. And therefore, the reforms are based on this thinking. We are only looking for the pathways to having the reforms implemented that provide us with less costs than having to fight so much over what is obvious that actually benefits all of us, as I said.
I'm going to come next to Prime Minister Sarah Kugangelwa Amadila. Kindly forgive me. I know that my pronunciation is not too correct, but please forgive me here. I'm very, very particular about pronouncing names properly. Now, your country, Namibia, was one of the first to attain upper middle income status in Africa. A great accomplishment. What are some of the lessons that the rest of Africa can take away from Namibia in this regard? I think your microphone is off.
Yes, thank you very much, moderator. And I would like to extend appreciation to President Ruto for the invitation extended to our president to attend. Unfortunately, he could not attend due to other commitments and has asked me to represent him. Yes, Namibia has achieved the status of an upper middle income country. We decided right after independence, which came after a prolonged bloody armed struggle, that we are going to promote peace and stability so that we can inspire the confidence of investors to come to the country, and we can create an environment where economic activities can be pursued so that development is achieved. We also adopted economic policies that ensured macroeconomic stability and also incentivized investors, both local and international, to come to the country. We invested significantly in infrastructure and in the development of the human capital. We have a very youthful population. We still have challenges in that regard, but education and training continues to be a priority. In spite, I must say, of the fact that we have managed to record positive economic growth almost every year since independence, except in a few years when we were faced with emergencies like COVID, droughts, and floods, and we are very prone to these disasters. We, however, still face challenges of inequities. The bulk of the population, who are the indigenous communities, are living in poverty, and much of the wealth is owned by Namibians of European extraction. So that is one of the serious challenges that we have to address. The second challenge is the fact that because we are a commodity-based economy for the most part, the growth in GDP did not necessarily translate in proportional growth in employment and poverty reduction. So although we have reduced poverty, we still have significant number of people that are poor, and also many of our young people are still struggling to find employment. So we consider it a priority to diversify the economy, to promote value addition, so that we can create jobs and also reduce the vulnerability of the economy to external shocks, including the shocks to droughts and floods. And actually, as we speak now, Namibia is experiencing one of the worst droughts that we have faced. About 1 million people are depending on government support to be able to survive, because the harvest was very poor, the rains were late and grossly inadequate. So we do have those challenges. And we are also prioritizing, because we are a small population, we are only 3 million, and we are vast in terms of infrastructure. It's very costly to put them up. We are prioritizing integration with the rest of the continent so that we are not limited in what we produce by our small population.
Excellencies, welcome to the second presidential dialogue session. It's a pleasure having you with us this morning. I was saying that as a leader whose country is going through a debt resolution process, in your view, what is the main weakness of the current framework for debt resolution, particularly as it concerns African countries?
The first world is the first world because they have produced products for themselves. They have produced a service which services their own demands for their own communities. So that's what we must do. So Africa must shift its focus towards science and technology, which brings about a service to the people, a product to the people. The things that we need, yes, there is the philosophy or the understanding that you cannot invent the wheel. But it is necessary that we change our approach to development and modernization by embracing. In fact, as a continent, we have everything at our disposal to modernize, mechanize our agriculture. Our education system should produce students who, when they leave university, they should have the pride that they have the capacity to produce a service for their country. They have a pride that they are producing products for their country. And that way, without much reliance on Europe, Asia, whatever, but exchanging scientifically the resources and knowledge among ourselves as African countries, I can see our country developing very, very fast. It is, in my belief, that those countries in Africa, on the African continent, who are doing well, they are doing well because they have internal domestic focus. What do they have? What can service their needs at the domestic level, as a country, as a people, both in terms of products and in terms of services? And if we all collaborate as an African country, as a continent, I believe that our pace for development and modernization will be faster.
Thank you very much, Your Excellency. I'm going to come next to President Sheikh Mahmoud. Climate and global shocks have become major deterrents to sustained and predictable growth and transformation. So what concrete actions are you taking to ensure that Somalia is able to withstand the proverbial storm and build resilience in spite of these shocks?
Somalia is a country that has been in a very unique situation for a couple of decades now. But there has always been a progress that the country was making. Of course, we say we are slow. We deserve to do much faster progress than we did. The challenge, the phenomena of climate change is a global, continental, and regional, and it is a reality. No one can deny today we are living with it every day and all days. So in Somalia, the fragility phenomena is among the challenges that we're facing. Very fragile country with fragile institutions. This has been complicated or compounded by successive years of droughts, followed by another year of El Nino and floods, and then regional infestation of locusts. So this makes the country face more complex challenges than ever.
Well, the presidential panel did set the tone for the entire meeting, and here we managed to catch some of the industry leaders from the public sector as well as the private sector to just get their sentiments around how can African countries advance their agenda when it comes to mobilizing domestic resources and cut reliance on international multilateral institutions. Let's listen in on some of what the leaders had to say.
The theme of this year's African Development Bank annual meeting is quite timely on global financial architecture reforms and how it can enable economic transformation for Africa. This really fits very well with all the work that we have been working together with the African Development Bank and African Union and other key institutions with ministers of finance, economic development and planning to build an African consensus on what needs to change to have a more just and equitable, inclusive global financial architecture. And the three areas that have been identified is ensuring that we have affordable finance at scale to support investment and development. Second is to have a functioning debt resolution framework. And third is to amplify and ensure sufficient voice and representation of Africa at a global stage. And it's fantastic that we are now having this as the theme of the AFDB annual meetings, also in a very timely point where we just had the approval at the IMF of the proposal that was put forward by the African Development Bank and Inter-American Development Bank for rechanneling the IMF special drawing rights to multilateral development banks. So the framework for doing this as rechanneling as a hybrid capital has been approved, which is a key milestone that we have. And now we look forward to the money being pledged and committed for implementation of this to allow actually resources to have leverage of 3 to 4 times and to enable MDBs and regional ones to actually play a bigger role in providing affordable finance. So it's a really kind of, a very important point in time, especially coming after this approval.
A lot of expectations after your presentation of the Africa Economic Outlook. Just give us a quick overview as we wrap up also the annual meetings that drew to a close today.
The African Economic Outlook report for the year 2024 of the African Development Bank Group focused on driving Africa's transformation and the global financial architecture. So basically, that report looked at how Africa can drive structural transformation in the context of the current global financial architecture, but also looking at how the global financial architecture is evolving and what African countries could do in order to benefit more from it, and then also what the global community could do to help Africa's transformation faster. As you heard during our presentation of the report, Africa's economies continue to remain resilient in terms of real GDP growth, with the GDP growth rates of about 3.8% on average in the past decade. Specifically for 2024, we expect a growth rate of 3.7%. But we still continue to have some challenges with regard to the fundamentals, macroeconomic fundamentals of the economies, including the issues of inflation that has increased from 14% last year to now, at the end of 2023, 17% on average across countries. And then one of the other challenges is the depreciation of national currencies that has been orchestrated by the strengthening of the United States dollar. Now, the other issue we raised is regarding the issue of debt. So even though the debt to GDP ratio in Africa is stabilizing and coming down to around 60%, it's still higher than the pre-pandemic level, and that still is an issue. But the more issue on the debt of the continent we find in the report is that the structure of debt is changing, now growing more to the private sector and private creditors, which now owns about 49% of Africa's public debt. And because of that, the high interest rate that comes with it and the short terms that comes with it is driving more of risks of debt vulnerabilities on this continent. But again, over 70% of Africa's debt is denominated in the US dollar. That means that the rising interest rate of the US dollar is also raising the debt repayment cost, the debt service costs on the continent. So our estimates show that the continent this year alone is going to spend about $74 billion to repay on debt service costs, and 40 billion of that is from the private creditors. So we have that challenge there. But the more fundamental challenge we found in the report is that even though the continent is doing well in real GDP growth rates, we can't hit real GDP growth rates. But in terms of per capita GDP growth rates, we are seeing that Africa is not doing that well as it's doing in the real GDP growth rate. So while we celebrate that Africa's real GDP is growing at a very fast rate and 10 of the 20th fastest growing economies this year, are in Africa, we also have to remember that the quality of that growth is not delivering jobs for youths on the continent, and poverty still remains a problem, and other forms of fragilities remain a problem. And that is why the report looked at structural transformation. How has Africa's economies been structurally transforming from lower productivity sectors to higher productivity sectors? And what we found in the report was a bit surprising. In terms of the technical definition of structural transformation, we are seeing the reallocation of labor from agriculture to other sectors in Africa. And what you see in other regions is that when this reallocation of labor happens, we are reallocating from low productivity agriculture to higher productivity sectors. But on the continent, we are seeing that reallocation happening from low productivity agriculture to low to medium productivity sectors. So you see that the transformation we're having in Africa is driven by push factors, not the pull factors. So the push factors here we see is climate change and insecurity in rural communities. So people are leaving farming not because of capital accumulation, but because of risks of continuing to remain in the farm. And that is why they are moving to lower productivity sectors as well. So structural transformation happening in Africa is not leading to higher productivity in manufacturing, which has only increased by 0.6% in the past decade. So that means Africa is actually not gaining the value of structural transformation. And when you look back, it is caused by the structure of the global financial architecture, which locks Africa into debt vulnerabilities, high cost of debt, high perception of risks that is on the continent, driving up the cost of debt and debt servicing, and because of that, low investments in high productivity sectors, including in agriculture and so on. And you just have that vicious cycle that we go back again to lower risk ratings and higher productivity. And the paradox there is that studies that has been done, including by Moody's Analytics, shows that Africa is the least defaulter with regards to long-term infrastructure investments, with a default rate of 1.9% compared to other regions where you have default rate like 12.8% in Eastern Europe. So the issue here is to consider why is Africa paying more even though it is having the least default rates. And access to concessional financing also is going down. So we see that the total financial flows onto the continent declined by about 24% when you consider FDI flows, remittances, and ODA, but also portfolio investments.
This meeting is coming under the backdrop of a lot of conversations building up from COP as well as expectations going forward. And I just want to kick it off with some of your key takeouts.
Well, this meeting is really timely in the sense that you heard about African heads of state talk about reforming the global financial architecture to make it accessible and fair for Africa. So the fact that this year the theme of the annual meeting is about the global financial architecture, in my view, is very much aligned to where we are today. So the question is, what do we do about the global financial architecture in a way that's likely fair to Africa? We had a couple of panels this morning where the heads of states talking about this is urgent, this is imminent, something we need to do, and making sure that Africa has access to the capital it needs to develop itself. So, but I'm also very comforted by the fact that the conversation is not just against the international community, it's also Africans as ourselves in really making sure we actually part of the solution. So the African DFI are organizing themselves so that ultimately they can also come to the table with solutions as opposed to just problems.
And this comes hot on the heels of the conversations you had in Mauritania. I'd like to know, what are some of your thoughts on this and how can this feed into this meeting?
Well, we ourselves with a group of African financial institutions decided to really come together and go and see the chairman of the African Union, in this case the president of Mauritania. I have to admit that meeting was extremely inspiring and uplifting in the sense that we focused on really three key problems. Number one, as you know, this year the theme of the annual of the African Union is education. So our first conversation was about human capital, building African expertise, so we can support our development as a continent. I think second, we talked about financing the development of the continent. In this particular case, we want to make sure there's an alliance of African DFIs that come together and make sure they bring their support to the table. We realized, like when we were in Mauritania, that all the organizations combined, our balance sheet was about $75 billion on the table. So we put something on the table, obviously, for Africa. But the last theme that we discussed was climate finance. We are about to get to COP29 in Baku. It's a very important gathering for the world. So Africa making the case that increasing adaptation and finance is extremely important. And we could not think of a better voice than the African Union chairman to really carry the voice of Africa on human capital, financing and development, and making sure climate finance works for Africa.
Well, at the highest level, presidents attending this meeting have raised very pertinent issues around climate change. For instance, we did hear from President Ruto, President Kagame, maintaining that Africa's time is now to step up. And looking at the gaps in terms of climate financing and the strategies towards mitigating the funding deficit, how are we channeling the conversation forward? What is the discourse that we would like to hear from African leaders?
Well, I mean, when you heard the conversation this morning, President Ruto in particular, who was the champion on climate, made the case over and over again. We contribute less than 4% to greenhouse gases, but nevertheless our continent suffers from the impact of climate change. And that's a fact. That's something that everybody recognizes. Now the question is, what is the international community doing about it? Now, number one, the fact that finally, after many years of pushing, we have a fund called the Loss and Damage. It is a good start in making sure we at least mitigate the impact of climate change in developing countries, Africa included. Now, the additional climate finance that we require to adapt and mitigate for Africa, it's in the billions. So the expectation is when we go to COP29, whereby this year the theme is climate finance, we're hoping we're going to go beyond just the words and get to the commitment in the billions that we expect from Africa. And I think while we're doing that, obviously the challenge, as you and I have discussed it many times, it's not just about funding, it's also project preparation. So you have to make sure that our countries are also well equipped and prepared, whereby when the funding is actually available, we can channel them to where it's needed. And that's extremely important in my view for Africa.
Meetings is the most important event that the bank has every year, because that's an opportunity for our 81 governors who are shareholders to come together to look at initiatives that is needed to drive development in Africa. And the theme of the annual meetings is talking about transforming the global financial architecture, because we realize that that architecture has disadvantaged Africa. So this meeting is very critical. A lot of the knowledge events are around that. How do we change the global financial architecture in order to support Africa to meet its development objectives? Well, you know, Africa is also off track to meet most of the SDGs by 2030. For example, extreme poverty at 33% is the highest. If Africa is the highest in the world. And if this trend is not reversed, by that same 2030, you're going to find that almost 9 out of 10 people living in extreme poverty will be in Africa. Of course, we came to Kenya, President Ruto and our President, Dr. Adeshino, they both share a passion to drive that narrative, to transform the global financial architecture, to support African countries to realize the dreams that we have to develop our countries and to take the rightful seat that we need to take in the international discourse on development issues. So I think we've achieved. Kenya has, this year we've recorded the highest ever number of registrations, doubling the average we've seen over the years. So it shows there's a lot of interest in what is happening at this year's annual meetings. Of course, it's the bank's 60th anniversary. We also saw a lot of heads of state and heads of governments that participated. That narrative, climate change issues, wealth, how do we transform the natural capital of Africa into wealth that can be counted as part of our GDP? That's what we've been discussing about, and I think the interest is high. We even have some students from universities that came because they want to know what's going on in Africa.
Well, I know, Anand, you are just from a session, and what were some of the key takeouts, especially from this particular meeting? What are you looking to advocate going forward, and where do you see a lot of opportunities for banks like yourselves to step up?
Yeah, so Absa Bank, in partnership with the AFDB, just hosted a session around green financing and just energy transition as well, which we're very proud to do, and we do it quite regularly. I think what came out is not just the financing piece, but how do you make it equitable for everybody in the spectrum, even those that are impacted with the crises that we see in terms of floods and so forth. That's something that we all need to work on. Because unfortunately for Africa, Africa is actually a net carbon sink. Africa is not the ones that are contributing to a larger extent on this crisis. In fact, we the ones now are being asked to come up with a huge chunk of solutions as well. So I think, we need support, but support across the broader space in energy transition. But also, I think when it comes to the ESG topic, and especially given that it's Africa, environmental is very important, but the social piece is equally important as well. How do we balance and accelerate the social target setting as well for Africa, I think is important, and is what's come up in the previous session that we hosted.
Looking at Somalia, what are some of the key opportunities, especially for investors and some of the multilateral banks that are taking part in this meeting, that you hope to perhaps hold bilateral talks and multilateral talks?
Somalia has a huge potential, untapped potential for investors. We have the longest coastline in the mainland Africa, so our blue economy is huge potential, has a huge potential for investors, and we are now actually joining the East African community. I think that is a key sector for investors to look into it. In terms of agriculture, we have the highest per capita in terms of livestock, so there is a huge opportunity for that. We can become the food basket in the region. We have, huge arable land that are uncultivated, so investors can also look into that. We are improving our, regulatory investment environment so that we will be able to attract more investors. But Somalia has a huge potential. We have a young population, human capital that can play a key role in terms of growing the economy, as well as also being a productive in the economy sector.
We're extremely excited because the Africa transformation is coming through very strongly from the private sector. 80% of the private sector that drives the economies across the Africa markets. We are extremely pleased to see what President Ruto has recently come from the US. A lot of investments in terms of energy infrastructure, employment, entrepreneurship, and this will greatly impact not only Kenya but Africa. We're also seeing bigger investments coming into the agri using technology. We're very pleased to see the private sector partnering with the public sector in terms of PPPs. And for sure, what we need to create for Africa now is employment. The Africa Continental Trade Agreement needs to move forward. The challenges we are facing for the transformation and also for the financial architecture is to bring more investors, more financial international partners, and to see that the people, the great people we have in Africa, are employed and given the entrepreneurship opportunity.
And Chris, what role are you seeing you playing, especially in trying to drive progress in regards to the continent and some of the challenges that Africa continues to face?
Well, with our daily group, where I'm the chairman, we have over 3,000 companies. We are working very closely with partners across Africa. We are bringing a lot of global solutions, global partnerships that will impact the companies in terms of transformation. Again, private sector very strong in terms of technology. These are the big opportunities that the new technology solutions, both healthcare, agriculture, in terms of the telecoms. And also, again, when looking at the ALN group, bringing in a lot of investments, some of the big transactions going on will definitely create more opportunities, more employment, and also to ensure that the youths are given projects that will earn them revenue and income.
This event comes on the backdrop of Kenya trying to position itself to the global community as a country that is on the move. I'd like to know your opening comments, especially in terms of your assessment of where Kenya is in regards to implementing reforms that are looking to transform the economy.
Well, thank you for those questions, very valid questions. I think as Kenya we are very, very excited because we're looking at the opportunity beyond Kenya, we're looking at the opportunity within East Africa, we're looking at the opportunity within COMESA, and obviously we are looking at all these regional economic communities stepping up to the Continental Free Trade Agreement. I think you're already aware Kenya was one of the first countries to have used the guided trade initiatives under the AfCFTA and exporting to tea to Ghana and batteries to Ghana. And I was actually very, very shocked when I realized that the phase down, the 5-year phase down on the tariff elimination has already begun. There are only two sectors which has not been concluded, and those two sectors, the automobile sector and the textile apparel sector. But by and large, 82% of the book has been agreed upon, and right now you can export tea in this year, 2024, to South Africa, for an example, where the duty is a specific duty of 400 cents to the kilo at 240 cents, and that will go down next year by another 20%. So by 2030, there will be no duty for tea, for example, one product, which is one of our biggest export markets, to South Africa. So similarly, the continent with its huge potential, 1.5 billion people, $3.5 trillion economy, 1 in 4 people on this planet will be African by 2050, 40% of the world's working age population by 2040 will be African. So it's really looking good for us, and I think we need to step up. We have the greatest asset, and that greatest asset that we've got and the asset that we're going to sweat is our human capital.
Well, it is a wrap from us here in Nairobi, and we normally say kwaheri, and it leaves with a lot of attention on African countries to consider some of the weighty issues that continue to face the continent, from matters debt, the climate agenda, and not forgetting tackling high inflation and unemployment. It is bye-bye from us here in Nairobi, Kenya. Until next time, see you again on CNBC Africa. My name is Abi Agina.